Have a look at the currency, where we saw the Kenyan shilling close flat against the dollar at 83.8090 and change from the previous close on Wednesday. The NSE 20 share index, on the other hand, added 0.8% to close Thursday at 4,955.61 points, with strong support seen coming from KenolKobil and East African breweries because of a lot of foreign investor activity. The all share index, on the other hand, gained 1.01% to stand at 126.52 points. With us in studio, we have Joy Migongo, a research analyst with KenolKobil Capital. Thank you for joining us.
Thank you for having me.
KenolKobil has come back into the news again after a takeover bid failed, or rather it collapsed last year. And now we are seeing them back in the news with a lot of activity coming in from foreign investors. Yesterday, it almost closed 10% up. Why are we seeing all this momentum in KenolKobil?
Once again, thanks for having me. KenolKobil, despite the failed takeover bid by Puma early this year, there's been news in the market that the local fuel company NOC is planning to take over a local oil company at 20 billion Kenya shilling, and that's the reason why there's speculative activity around KenolKobil, because it's well believed that chances are it is KenolKobil. So we've seen a lot of investors, both foreign and local, taking positions ahead of the possible takeover.
But have things changed in KenolKobil to now come back into the market for another buyer to start eyeing it?
KenolKobil is a good stock. They have strong assets in the East African region, and we expect first quarter performance to be quite good given the stable macroeconomic environment in East Africa, as well as a decline in global fuel prices. So that might boost their bottom line. As well, we're also thinking if they might experience much lower losses on their forex position, if not gains. Yeah, so we should see them perform better.
We have seen stability in the Kenyan currency and also other African economies, so that is something that you also expect to propel their full year earnings?
Exactly. We've seen the Kenya shilling strengthen to about, you just mentioned, 83.90 as of yesterday, compared to a low of 86 at the beginning of the year. So that should be some good news for the company.
And looking at the environment, looking at the whole environment of fuel, looking at consumption, looking at economic growth, we saw the fuel price review coming in much lower by about 5 shillings across the board. Is that something that you also see that is likely to continue into the quarters that we're looking ahead?
It's very hard to predict that, given that it's informed by the performance of global fuel prices. But what we've seen so far, year to date, the global fuel prices have been declining. I think right now they're at about below $100 per barrel. So if that trend continues or holds stable, then that should be good news for the fuel marketers.
Yeah. Any headwinds you see ahead of KenolKobil as they start looking for another buyer?
You see, all this is speculative, so it is very hard to talk about that, yeah, but we'll be watching the stock keenly.
Very true.
Yeah.
The other stock that has been attracting a lot of foreign investor activity is East African breweries, closing again at another new high. What is really driving this stock? There seems to be a lot of excitement, a lot of rallying of this stock, and year to date it's also one of the stocks that has been very bullish. Yeah. What are the key drivers of this stock?
We're seeing a lot of foreign investor activity on East African breweries. Every day we keep reaching a new high, and it's quite surprising. But then again, East African breweries has some strong fundamentals. I think they're looking at the potential that the new market in Tanzania has, and also their presence in Uganda. They acquired Serengeti breweries in Tanzania, and that should see them manufacture their brands in Tanzania from Tanzania, as opposed to doing it in Kenya and importing it to Tanzania, and which, as a result, their gross margins are expected to improve as a result of lower cost of sales.
How about their costs? Because as they expand, of course, they're expected to incur some costs. You're talking of staff costs, you're looking at expansion costs. What are some of those costs that they're likely to be looking at, and how they're likely to affect their bottom line?
We're not talking about them expanding, we're talking about expansion activities that have already taken place. So now they're expected to realize the benefits of that expansion. Of course, they're highly leveraged. Their debt to equity is about 271%. courtesy of the 19.5 billion debt that they took from Diageo, but that should be paid off in the next 3 years. So we should see better performance after that. We also think that they are banking on premium brands to drive revenue growth, the likes of Tusker Malt, and also spirits. Spirits should be a boost, a big boost for their revenues, as there's been increased uptake in the region, in Kenya, Uganda, and Tanzania, and we're projecting about 12% CAGR for the spirits. Yeah.
And of course, looking at inflation across the board, it has been edging lower, and of course that means people have some extra money in their pockets to try and have a little bit of alcohol.
Exactly. We expect disposable income levels to continue going up. We've seen an improvement in the last couple of years. Looking at if the gross national income per capita is anything to go by, looking at Kenya, Uganda, and Tanzania, we've seen growth over 30% to about $790 in Kenya, but that's up to 2010. The figure must be much higher by now. Yeah, so we expect improvement in disposable income to also boost performance of these consumer stocks, East African breweries being one of them.
Looking at the flip side, we saw Scan Group, one of the listed marketing companies in the Nairobi Securities Exchange, shedding quite, it's about 3%. What is happening in that stock? And also when you look at the expansion strategy, we saw them going into West Africa where they've been facing some challenges. Is that something that is affecting their stock presently?
Currently.
Yeah,
Scan Group is a good stock, has strong fundamentals. Their Pan-African expansion strategy should drive their growth in the next few years, but we saw them go into Nigeria last year, where they've been facing some legal challenges. They've been they're in court, and as a result they've lost some deals in Nigeria, and this has resulted to them restructuring the operations in that country. They've been recording losses, 90 million loss last year, and an expected 125 million loss this year. So I think that is why investors are a bit apprehensive. But in the long term, I think Scan Group is a good stock to watch, because they are also in Ghana, which should be, they're trying to strengthen their presence in the West African region through Ghana. Already they're servicing several clients in that market, including Airtel and Vodafone, and we should see them acquire more clients in that region.
All right. And